Let me now also welcome on board Nitin, Rakesh, the CEO, and Manish, Dugar, the CFO of MphasiS, to talk about how their earnings panned out. And Nitin, if I could start with you, we've seen a decent growth of 1.6% in constant currency terms and direct revenue growth of about 5.1% on a sequential basis. However, what has led to the sharp decline of the DXC business of about 17.9% on a quarter-on-quarter basis?
Sure. I think over the last 2 or 3 quarters, we've seen a pretty significant acceleration in the direct business. I think from a YY perspective, we are at 19% growth this quarter and almost 16+% growth on a YTD basis in the direct business. I think we're using that tailwind, that we have from the direct business to, in a way, continue to, fix the portfolio concentration of the business. So that's, one of the reasons. Second, of course, while we have the MRC construct in play, I think we are at this point in time, focused primarily on consuming the MRC and continuing to expand our relationship beyond September 21. And we've made good progress on that front as well. So while this quarter, which seasonally is a weak quarter across the board for the industry, I think we've seen another quarter of decline in DXC. But I think broadly, we are turning to a place where we think that we'll continue to find stability and longevity in that relationship as well.
Manish, what about the margin performance? That it's been good. More importantly, can you really sustain or see an uptick in these margin performances, and would you have enough levers for the same?
So philosophically, we have guided that we would prefer to be in a stable range of margin with a northward bias while investing for growth, and all of that has come through for us over the last few quarters and in this quarter as well. This quarter, like Nitin mentioned, is a seasonally weak quarter because of the furlough. And while, we don't do a once in a year correction, but we continue to give salary corrections based on the internal assessment tool, which gives a GQ score, so to speak. So that has also reflected in the financials. And most importantly, we have tried to be close to the customer, invested in building competence. Datalytics acquisition was to do the same. And we have also invested in trying to make sure that supply chain does not come in the way of fulfilling the demand and meeting the customer requirements. So we have actually taken a little lower utilization in this quarter, which means we have more operating metric levers now than we had in the previous quarter. And despite all of this, we had an expansion in our gross margin. We expanded the EBIT margin from 16.1 to 16.4. And all of that delivered a significant improvement in EPS to a 17.44 rupees. I would say we have reasonable confidence on remaining in that zone of EBIT margin with a northward bias.
Nitin, you've got new TCV deal wins to the tune of about $247 million in the third quarter. What is the outlook on the deal pipeline, in terms of which verticals and geographies are seeing good momentum?
So I think this is our third quarter of over 200 million. I think last 2 quarters set new records. We are pretty close to that number even now. Having said that, I mean, we have sold almost 65% more business YTD this year than we did in the same 3 quarters last year. So I think the deal momentum on the win side, and this is net new TCV, not including renewals. So I think that momentum continues to be very strong, and that's obviously translating into the direct revenue growth of high teens right now. Good news is that despite rapid conversion of deals, and we've had 2 of our largest deals in the history of the company this financial year, I think despite that conversion, our deal pipeline is still fairly strong, which means we've actually added new deals to the funnel as well. We do believe that we are still operating at record pipelines. I think pipeline is fairly broad-based across, I would say, both US and Europe, and also across verticals. Right, we've seen, I would say, good momentum. If you look at even, banking has been very strong growth driver. We've seen a 30% type of growth in a YY basis in that business. Of course, we've continued to see good growth, in sequentially almost every industry, which means that we're starting to kind of pick up deals pretty much across the board. This quarter, one of the large deals was actually in Europe. So we do have a good large deal pipeline also in Europe as well. If you also look at the average deal sizes in the last 2 years, that average deal sizes have doubled for us. And that's reflective of the fact that we are now doing longer term and bundled transformation deals that actually require us to take on a piece of work and transform it on behalf of the client. So I think all of that trending in the right direction from our standpoint.
And given that MphasiS recently acquired UK-based Datalytics for about £13 million, how is this acquisition really going to help the company? Will we see more M&A deals going forward?
I think this is the second acquisition in 2 years, and both were of the same philosophy, which is buy a business that brings new competency and is additive to our capability. The first one we did was actually a DevOps design company on AWS in financial services in the US, something that really helped us in expanding our DevOps competency, and we reverse merged our DevOps drive into that business. Datalytics is a data engineering and modernization business, partnered, one of the premier partners of Snowflake, in fact, their largest partner in the UK, and also a very strong talent competency. So I think for us, this is an additive to our data tribe. Will definitely go a long way because clients have really majorly kicked off multiple initiatives to transform the way they run their data initiatives from a Gen 3 data lake type mindset to a much broader cloud native, and a cognitive mesh type of mindset. So I think from our perspective, this will really accelerate our competency and our ability to then apply these transformation deals to the clients that we service.
Okay, Manish, now that we have Biden as president formally, some of the proposals, of course, include removing per country immigration caps, and that means for US visas and so forth. How do you see this having an impact?
From a supply chain specific perspective, and that's where the IT services industries has the maximum impact. I believe the industry has remodeled itself for a situation where the dependence on anything happening through H1B is not significant. Having said that, this business is all about getting the right talent at the right place at the right time, and having a flexibility to move people to get understanding of the client requirements, to also have cultural assimilation and make sure that both sides understand each other. Plus, there's just the logistics of managing transitions at the right time at the right place, which also has an influence on the operating metric and profitability. I think this should certainly augur well for the industry.
Okay, fair enough. And Nitin, some of the same question to you really, in terms of Biden's presidency and what it means in terms of policy for the IT industry. I wanted to get your take as well.
Still early days. Clearly, the immigration reform is high on the agenda, is what we are hearing as well. I think if there is some form of normalcy that returns in that framework, especially with the recent executive orders that were issued by the last administration, if those are kind of taken care of, then we can at least start thinking about having some rotation as well as mobility with our employees, which has been difficult in the last 9 months or so. So I think from that standpoint, it will definitely help. But I think on a longer term basis, the industry supply chains have adjusted. We've created a lot of resilience, so we're not dependent on any one channel, namely H1B. But I think it's an important element of the overall supply chain. So it'll net be positive because it'll definitely open up avenues for us to tap into talent as well as augment and create the ability for our employees to work around multiple locations.
Sure. Nitin, lastly, media reports are suggesting that BlackRock is looking to, or rather Blackstone, I beg your pardon, is looking to exit MphasiS, and the fund's 56% stake could actually trigger an open offer. Could you confirm the same? Give us any updates if you have?
Unfortunately, I also read what you read, so it's difficult for me to comment on media article. I think if there is anything that is to be reported, we're a well-governed company, and the board will definitely make sure that we give the right release and the right notification at the same time. And that's all I can say right now based on the media reports.
Okay. Both of you, thank you so much for taking the time out and joining in today. Great to have you on the show and analyze what Mphasis performance has been like. In the meantime, what is it that we're staring at for the market? We're absolutely flat right now, slight bit of recovery for the broader universe, and that's largely led by autos as we speak. Britannia